This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios, and it's a Friday. Well, yes. I think that's one of the things which stands out as a highlight. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. Good morning. How our moods change, right, when it's the weekend upon us? I mean, this, like, what does it mean? Do we enjoy coming here or not?
That seems like a deep philosophical question. What does it all mean?
A question for another day, right, perhaps? But yeah, I mean, it is Friday and all cheers everywhere.
Yeah, but we have plenty of cues with regard to market cues as well. And we get into the weekend and then we have India kick-starting our World Cup campaign. Yes. So plenty to look forward to, but let's get through this day first.
So let's start. And it's not a bad kind of way to start the day, right? It's an important day. And I think I want to start by saying that, especially because of two reasons. One, of course, the way the market's been traded, it's a little tentative, but because of data. I mean, there is the RBI policy today. The decision will come out, the MPC here in India. And then later tonight, you have the US jobs data, with the monthly jobs data. So both are, I mean, important. One is important, especially for, liquidity in the system, rates, etc., here in India. The other one is important for that global risk-free rate, which is the US 10-year, which has been basically the focus for the last fortnight or so. The relentless rise there, backed by consensus pivoting to the fact that maybe, the economy is still strong, so rates need to be higher for longer. This is, in that sense, the decider data because, over the last couple of days, we had the jobless claims, we've had JOLTS number, we've got some weak data as well, but this is more steady and a monthly data point, which will, I think, decide on that. But that's only later today. Now, equities overnight ended absolutely flat. The Nasdaq was down about 0.12%. The pullback, and I would say it's a tactical pullback because, and why not? We put that data out basically saying that after very sharp spikes in 7 instances over the last 20 years, you see pullbacks. So that is underway, but very small still. So both the bond yields and dollar actually came off a little bit. So the 10-year came off about 2 basis points, nothing. 4.71. The dollar index came off a little bit more, about 0.4% or so to 106.37. The reason I'm saying it's tactical is because if you look at the data, which is the jobless claims number, weekly number, that actually was not strong or anything. It came in low, which means that the labor market is strong. So that is not what fed into yields in that sense. There was some Fed speak as well, but at the margin, didn't make that much of a difference. Now, oil is the other one, which also continues to weaken, thankfully. So you've got the Brent oil sort of price, which now stands at about 84.18 at this point in time. So, from 97, closer to 3 digits, down to 84, I think that's a absolutely big deal. Tonight, we get the jobs number, and, it needs to hit the sweet spot. The labor market data. It needs to be neither too hot, neither too cold. It needs to be not strong, not too weak. It's a tall ask, but that's basically what we are aiming for. Because if it's hot, once again, it will give credence to the fact that interest rates need to be not just higher for longer, but at a higher level for longer. And that's not something we need. In any case, we'll only be sort of privy to all this information when we come back to trade on Monday morning. So where does all of this leave us in terms of levels? The Nifty ended in the way it started. We started with a 100-point rally. Mid-session, it added another 40, 50 points. But by close, you had 100 points to show for it. So that's the Nifty for you. Resistance for the Nifty comes in at 19,605. Basically, the 19,600 level around where the markets kind of found support earlier, that becomes a bit of a resistance. That's 50 points away. And then the bigger number is that swing high, which we put out yesterday as well, which is 19,726. That's the more important number. Near-term support for the Nifty comes in at 19,443. On the Bank Nifty, yesterday's high coincided with the 78% retracement of the August to September rally, which is that number, 44,376. So that's the first resistance that the Nifty Bank needs to sort of cross. And support for the Nifty Bank comes in at about 43,830. which is basically the 1st of September low, which was respected, which we got to almost within 20 points day before yesterday, but which is still held on. So hopefully that doesn't come into the contention, at least not today. GIFT Nifty will come up on your screen. RBI policy days, usually post RBI policy, we've tended to see moves depending on what's said and what's done. So I think, of course, the first 1.5 hours, 11 o'clock is the policy. I mean, you just need to, 10 o'clock, I'm sorry. So you just need to kind of at least wait for the first hour before you decide what one wants to do. In any case, I would say wait the entire day. Wait till you get that data out of the US out of the way, etc. Because Monday could look very different depending on that one data point. And that will have a lot of influence on global rates, etc. Sonia.
I love how you described the jobs data, right? Not too hot, not too cold, not too strong, not too weak. Sounded like my coffee, you know? That's the way I like my coffee. So is that how the jobs data should be?
I mean, sweet spot, right?
Fine, that's sweet spot. But I mean, for the market, right? I like the way yesterday panned out because we saw a good recovery. And by the end of trade, one thing is for sure, that the market is very resilient. Despite all the global cues, the Nifty held fort around that 19,500 level. So that's a good thing for the bulls. There was L&T, ICICI Bank, Infosys. So a lot of heavyweights really made sure that the market got back to that 19,500 mark yesterday. The good part also is that although there is FI selling, it's been a pretty long streak of FIs selling in this market. The selling has reduced substantially. So just look at the numbers over the last many days. On the 28th of September, the selling was over 3,300 crores. On October 4th, it was 4,400 crores. But yesterday, it was the lowest that we've seen in the last many days. So FI selling has definitely reduced. The RBI policy, I don't think it's going to move the needle of the market too much. It's expected to be a status quo policy. Yes, there would be some macro data discussed, but from a market standpoint, I don't think too much, of the markets would move because of it. The other thing to watch is what's happening with oil prices. The slide that we've seen has further extended. So Brent crude is now at $84 a barrel. So keep an eye out on that. And the US markets, yes, the jobs report is important, but the US markets were largely flat. You saw buying coming in from domestic institutions in our own markets as well. Lots of positives coming in from business updates, whether it is in the banking space, whether it's in the auto space. Tata Motors had a good business update that they came out with. Some of these companies like Nykaa, Kalyan Jewelers have come out with their updates as well. We'll talk about that in greater detail. But give and take everything, this is a market that's strong. I mean, it's holding at 19,500, and the bulls would definitely like that. Today, once the RBI policy moves out of the way, perhaps the next leg would shape up.
Well, that's right, Sonia. We have two big cues, right? The domestic cue is going to be the RBI governor, and the global cue is going to be the jobs report. And I think both these cues put it together, give it 100 points each. Maybe you see a swing of close to around 200 points on Monday itself, Monday, Tuesday itself. So we're bracing for a move either towards 19,750 or to the downside, it could be 19,300 odd. How is trade set up? Yes, it was a good relief rally. The problem is resistance levels stay intact. The next point is the fall in crude oil prices. It's been perfect. It's been timed perfectly from an Indian bullish perspective. Because imagine the RBI governor speaking when crude oil prices are at $95 per barrel. Today he's going to be speaking with Brent crude prices at sub $85 per barrel. So obviously it gives you some bit of comfort. And the Nifty Bank is going to be the index in focus. That's been the underperformer for the last few sessions. The positioning is net shorter there. So the last thing you want is to hear a hawkish sounding RBI governor. If that doesn't happen, if he says pretty much what is expected, I think the Nifty Bank could be the one that could come in for a bit of a short covering bounce, provided there's no negative surprise. How is positioning then? Well, yesterday we saw some first signs of some short covering on the Nifty Bank because it ended higher and the open interest was lower. The FI data as well perfectly ties in out there. There was mild short covering, 2,000 contracts lower on the short side. They continue to remain net short, though, with the positioning at around 74%. And in absolute terms, it's nearly around 88,000 contracts. Which brings us to the options data then. 19,500 put, fairly active in trade. 19,600 call as well, fairly active in trade. Premium on both of them, close to around 80 points. So for those that are writing that 19,500 put, as the graphic plate is telling you, the premium was around 80 rupees. You deduct 80 rupees from there. On the downside, first support, 19,420. On the upside, though, the first resistance zone comes in at around 19,610. And then since we saw a fair bit of addition at around 19,600 call, well, 19,670 becomes a bit of a resistance zone. But the Nifty Bank is going to be the key focus today. And yesterday we saw 44,400 call, had a fair bit of open interest build up. The premium out there is nearly around 200 rupees. So the resistance level is at around 44,600. The 100 DMA as well comes in out there. And going by the options data as well, the recent low will become a bit of a support zone. If somehow the Nifty Bank can get towards those resistance zone, that's going to be the index to track. For starters, we start off in the green. First couple of sessions, we move more or less, first couple of hours, we move sideways, and then we take it from there.
Okay, and lots of individual stocks in focus. So many business updates coming through. So we'll pass through them and tell you the good from the bad in a while. But first up, we have a cue coming in from Pankaj Chaucharia of Antique Stock Broking, a view that is. He says that overall, given the expectations of a capex cycle recovery, he continues to prefer industrials, real estate, cement and PSU banks. He says the FY23 Nifty 50 earnings currently stands at 809 rupees. FY24 at 962 and FY25 at 1100. He says their March 2024 Nifty 50 target stands at 20,800 based on 19 times FY25 EPS of 1106. High global yields and crude oil prices are key near-term risks. Pankaj says stocks that could post a positive surprise include SBI, ITC, GAIL, Kirloskar Oil, Cummins, Alchem, Lupin, Prestige, Brigade, Soba, Voltas, JSPL, NCC, Shree Cement, JK Lakshmi Cement, SBI Life, Max Financial and PTC, while stocks that could post a negative surprise include Tech Mahindra, Asian Paints, Gujarat Gas, Dr. Reddy's, Oberoi Realty, NMDC, Ashoka Buildcon, Rallis India, Torrent Power and Indian Hotels.
Okay, well, let's get you some money market views. On the rupee, we've got Lakshmanan V of Federal Bank, who says that the US 10-year yield cooling off from 16-year high levels and a sharp fall in crude prices assisted the rupee from breaching all-time lows. Yesterday, the rupee traded in a very narrow range. This week, ahead of RBI, NPC and non-farm payrolls data due later today. He expects that INR to trade in the range of between 82.88 to 83.48 to a dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan V of Federal Bank says bond yields cooled off from highs, tracking a fall in crude and US yields. Markets seem cautious ahead of the RBI MPC. He expects the Indian 10-year benchmark bond yield to trade in a range of 7.15 to 7.3% in the coming sessions.